Hello guys, so this is Daniel Lim here. So in this video, I will be sharing the earnings review for Amazon. So Amazon has just released their Q1 2024 results. All right, so let's go through it together. So for the market, all right, recently they have been quite positive for Amazon. The price has been risen for the past 5 days, and headlines have been quite positive. All right, and posting the earnings preview are quite good. They focus on AI. Quarterly profits almost tripled. They beat estimates. So far the sentiment for Amazon has been quite positive. But let's dig deeper. Okay, and let's see what's happening lah. So for Q1 2024, this is their financial results. You can see their total net sales, which means the revenue, all right, has increased by 13%. From 127 billion, okay, last year, compared lah year to year, and 2024 they grow to 143 billion. So it's a 30% increase. But what's amazing about this is their total operating expenses. Okay, revenue is increased by 13%, but okay, the operating expenses only increased 4.4%. Now, when this happens, right, the bottom line will definitely increase a lot. You can already see the operating income increased by almost 200%. Not almost 219%. From 4.7 billion, grow up to 15.3 billion. That's a very huge increase. And because of this, all right, the net income also increased a lot. The net income from 3.1 billion and it grow to 10.4 billion. That's a 225% increase. That's a really, really huge increase in their results. Okay, so let's go through the financials even deeper. All right, let's go through it now. So this is Amazon's financials. All right, now through here, obviously you can see that the revenue has been going up, okay, consistently. Now perhaps looking through like that, it's not so obvious what's the biggest improvement. So let me remove this total revenue. Now you can see the huge difference. You can see, all right, starting from 2022, okay, 2022 here, all right, the operating income, the net income, can you see that has been increasing, okay, quite a lot, right? Despite, of course, okay, the revenue, all right, growing, you can see not as fast, okay, but, okay, their operating income, their operating income and net income has been increasing a lot, okay? So this has also another benefit also. All right, let's look at their margins right now. Amazon's margin. You see, the gross profit margin since 2014, this is yearly, okay, and I'm using trailing 12 months. Okay, trailing 12 months. All right. So you can see from 2014, you can see their gross profit margin is around 29.5%. Okay. And then today, they manage, okay, to continue keep growing it, okay, to 47%. For a business, okay, for a gross profit margin to be able to keep on increasing shows that it's a quite very strong business. And then operating margin also continue to increase. Okay, the same with also net profit margin. Net profit margin, you can see from December 2014 was around negative, all right, negative 0.27. But I believe right now, okay, Amazon should be focusing on profitability already. So that's why you can see every single year, all right, they have been increasing both in their operating margin and the net profit margin. So today, net profit margin is at 6.38% and operating margin is at 8%. It's a very huge improvement okay, from 10 years ago. All right. And what's even more astounding is their growth rate. All right. So let me remove this. Okay, let me remove this. The net income and the operating income. Okay, now you can see the huge difference. Now you see this line here is the total revenue. That means how much they grow. All right, how much did they grow? So you can see for the March this quarter, they grow 12.54 or 13%. Right. So for the past these few years, Amazon has been increasing by close to 10, around the 10% to 12%. Okay. But what's changed is what? Is their operating expenses. Okay, the operating expenses is growing, but growing at a declining rate. And that's very good news. They grow by 34%, 32, 29, and then drop it, okay, until they only grow 6%, the operating expenses. Okay, now, this is the beauty. This is the beauty here. let's look at their operating income. Now, when this happens, okay, when the revenue consistently grow, but the operating expenses keep on dropping, declining rate, all right, this is the thing. Your operating income will shoot up. So the operating income grew at 232%, okay, recently, and the net income has been growing 700%. Now, this 700%, perhaps you may see that, is it correct or not? 700%, it's correct. Okay, let's go back to this here. You see, why 700%? You see, this is 37 billion. Okay, 37 billion here. You can see, 37 billion is compared to March 2023, which is around 4.3 billion here. So yes, it's around 7 times difference. So this is the thing, okay, when you have operating leverage in your business. Okay, so Amazon, in terms of financials, have been doing quite well. Yeah. Now let's move forward to the segment revenue. Now, here, as you all know, Amazon has a lot of business segments, okay, on online stores, physical, third party, So let's look at this pie chart, okay. We can see that online stores obviously is the biggest contributor, all right. And then third party seller services contribute to 24%. And AWS, which is their cloud service business, contribute around 17%. Okay, later on, I will share with you, okay, the highlight for this quarter is actually on their AWS business. Okay, now let's move to the news release highlights. Now, Amazon has released quite a detailed news release, and it's quite long, you see. A lot they share to us. Yeah. Okay, so let me share the highlights, the important for us shareholders to know. Now, in the news release, okay, they tell shareholders, okay, they are still, okay, obsessing over customer experience. You can see here, right? The highlights, they are still obsessing. And then they tell us, what they did, everything here. Yeah. So let me summarize and just highlight the important ones, the ones that can give a bigger impact for their business, right? So Amazon obsesses over how to make customers' lives better and easier every day. Yeah. So what do they do? Okay, number one, they continue to delight customers with fast and convenient delivery. Yeah, everyone, okay, I want my delivery to be fast. I want it to be very convenient. All right. So it's good to see that, Amazon in the US, okay, for those Prime members, okay, nearly 60% of them, their orders arrive at the same or the next day, okay, which is considered very fast. Then London, Tokyo, and Toronto, 3 out of 4 items delivered received on the same or the next day. Yeah, so this will improve customer experience, okay, which will of course increase the stickiness of this product. And not only that, Amazon also launched events, all right, maybe discounts, or savings, okay, for to help customers save money. So they launched, like let's say in Europe, Amazon Spring Deals Day, Canada, another big spring sale also. Then for the Muslim countries, like Egypt, Saudi Arabia, UAE, there's a Ramadan event. All right. So these are few initiatives, okay, for them. Okay. And what else? Yeah. And not only that, to further improve, okay, their physical stores, it has physical stores business, right? Now here, the orange color one. Yeah, although still 4% contribution, okay, but they still continue to focus on the customer. So they launched a grocery subscription for unlimited delivery on orders over 35. So for those of them who want to make orders from Whole Foods Market, Amazon Fresh, all right. So they can subscribe. You can get free delivery, right? Provided, of course, your orders are above 35. Now, not only that, in terms of their cloud service customers, they continue to expand their infrastructure. Okay, continue to expand, continue to invest. So Saudi Arabia, they already wanted to invest around 5.3 billion, Mexico 5 billion, Mississippi around 10 billion. All right. Why this kind of investment? How does it help the customer experience? Very simple. When you have more infrastructure, they say data centers, right? You will improve your loading time. All right. That means your data is quite nearer to you. So your experience is much better instead of waiting for a long loading time, right? We don't want that. Yeah. And of course, you reduce latency, and businesses that uses AWS are able to scale, okay, to another country, for example. When let's say you have data center in that country, all right? So they can scale it very simple. Yeah. So I think Amazon's DNA is still there. All right. Jeff Bezos, okay, also had this quote lah. The number one thing that has made us successful by far is obsessive compulsive focus on the customer. I think until today, the new CEO still carries on this DNA lah. Yeah. And then we are not competitor obsessed, we are customer obsessed. We start with what the customer needs and then we work backward. That means that they find, okay, what the customer wants from them. And then they go and think how they can deliver it. I mean, how they can make it come true. Lah. Yeah. Okay, so this is a news release highlights. Now, the key points from the earnings call. This is an important one. So every time there's a quarterly report that comes out, there's an earnings call transcript. Okay, and this is the one that we get to dig up, important information that will help shareholders like us, okay, to make decisions, okay, whether the company is still good, okay, or is it, getting worse, So let's go through it together. I've already read all the earnings call, and these are the key points that I feel is important for every one of us to know. So number one, AWS, okay, the business segment, if you still remember, that is quite a huge contribution, okay, in terms of revenue, AWS, is 17%. But I believe in the next, few years, right, it will get bigger actually, okay, than the third-party seller service. It will overtake to become the second one. Okay, why is that? Okay, very simple. The first point you need to take note is AWS can still continue to grow. Why? Because there's still a huge total addressable market. Andrew Jassy, the CEO, right, tells us, you can see here, from where already? Here. See, we are at 100 billion plus annualized revenue run rate. That means this business, okay, the recurring revenue is around 100 billion plus per year already. You may seem a lot of money, but, okay, Andrew Jassy told us 85% or more of the global IT spend still remains on-premise. Now, on-premise means what? Means that they are still businesses, okay, that still runs or save their data, right, using data centers in their office, a physical data center. It's quite shocking, okay, to know this information. Yeah. So it means what? So when you are still 100 billion, and yet there's still so much, space to expand your market, right? So it tells us that there's still a lot of runway for Amazon in terms of the AWS business. Yeah, 85% of global IT spend is still on-premise infrastructure, infrastructure instead of the cloud. All right. And not only that, all right, what boosts this demand to move people to cloud is actually this generative AI. Okay, generative AI will be a growth booster for AWS, okay, like how the internet opens up new revenue opportunities. So this is what, Andrew Jassy said. Okay. Yeah. So again, I think there's actually an opportunity in our existing large businesses, okay, along with advertising at AWS. Yeah, it means we have a lot of growth in front of us. And that's even before generative AI comes in. And now generative AI comes in, is a huge new level of growth. That's what he said. Okay, you see, which I don't know any of us has seen any possibility like this in technology in a really long time. Okay, for sure since the cloud or maybe since the internet. All right. Okay. The next thing to take note is, all right, is it really true? AWS, you see they keep on growing. All right. So the only thing we can make sure, okay, to see whether it's true or not is true. Where does Amazon spend their money? So Amazon's capex will increase year over year to build more infrastructure to support AWS growth. So this is what he says. This CFO Brian. Now, as I mentioned, we are seeing strong AWS demand. Right? Why? In both Gen AI and of course non-generative AI workloads. Okay. Now, you see, it's actually still relatively early. Okay, with this generative AI, it will bring new demand, but they still say they're still in the early days, right, in the cloud space, and they see sizable opportunity for growth. So, okay, what they will do right now in order to catch this demand, okay, and the growth, right, or I would say to fulfill the demand, right, we anticipate our overall capital expenditures to meaningfully increase year over year. That means they already plan, okay, to do more and more capex, increasing capex every year. All right, because driven by higher infrastructure to support growth in AWS. Okay, now these kind of investments, okay, will it bear fruit or not? So Brian, okay, they educate us They say Amazon always invest first, okay, and you will see returns a few years later. Okay, and this time already, most of the capex, like last time, okay, the capex a lot on online stores and physical stores. Okay, they keep on investing on that, and in the infrastructure, delivery services, fulfillment centers. These are investments for their online store side. Now, okay, Amazon said they will focus more on the AWS already. Okay, why I say that? Okay, you can see what Brian said here. Now, again, not only the CEO, but the CFO also say this. We are seeing strong demand signals from our customers and longer deals and larger commitments already. And you see, he said, we have done this for 18 years. So we invest the capital and resources upfront. Okay. So because they want to create the capacity, create first, okay, the supply, let's say, okay, so that they can fit the customers' demand in the future. And then we see the revenue, operating income, and free cash flow benefit for years to come after that. So they always invest first, and then they will see the returns, okay, a few years later. And that's why they say for the most of the part, right? For most of the part, what you will see is really going to be on the AWS side. That means they will invest more on the AWS already. So it shows us, right, that AWS will be the next growth driver, okay, of revenue for Amazon. Okay. Then the analyst here, okay, ask lah, okay, the management, okay, do you think that there's another chance of giving back, doing dividends, okay, or doing share buybacks, okay? Because you see, so just remind us again how you sort of think through the philosophy of returning capital to shareholders, in addition to continuing to invest for the long term. Yeah, because normally companies, if they have no better use of the money, that means it's like I grow so big, I don't know what to use with my money. Then I will definitely do dividends. Okay, I'll do share buybacks. Okay, but this is Brian's answer. Okay, you read together with me. Now, so far as dividends or buybacks, right, we don't have anything to share with you today. That means there's no plan at all at the first place. No give dividends and no buybacks. Why is that? Because they still believe Amazon can still continue to grow and a lot to continue to invest in. So our first priority to invest in to support the growth opportunities and long-term investment in our business. That is their first priority. All right. So they still have a lot of opportunities on what? Generative AI, right? Generative AI. Yeah, and they are very, very passionate and have a lot of conviction, in this demand, okay, in generative AI and AWS. So you see, they showed us okay, in 2021 and 2022, okay, they have negative free cash flow at that time, right? Which is quite true okay, if you can see that later I will show you 2021 and 2022, right? Okay, after the pandemic, you know what they do? They doubled the size of their operations network. They have a lot of other expenses, so at that time they show negative free cash flow. But after that, because of these investments, right, in 2023, they had our largest and highest free cash flow ever. And until today, in Q1, these trends carried on. So let's check. Okay, let's check whether what he says is true or not. So let's go over here. You can see, which is quite true. December 2021 and 2022. Okay, yes, okay, they have negative free cash flow. I can see these 2 years. Yeah, because very simple. Because cash from operations is only around 46, but they spend capex, see capital expenditure here, around 61 billion. So that's why their free cash flow is on the negative side. Yeah. So for these 2 years, they were doing investments. And that's why in 2023 and today, until today, you can see this is the highest free cash flow ever, which is true. So free cash flow for December 2023 is around 32 billion. So it's really higher than the previous years. So what this Brian said is correct. Yeah. So they are repeating the same formula again, and this time on AWS. So they will continue to what? See, we are again still anticipating higher capex this year. All right. Yeah. So for us, okay, we can just continue to follow up, okay, and see, whether their investments, okay, for this 1-2 years, all right, will continue to yield fruit, okay, in terms of AWS. Yeah. So the thing to take note right now to continue to follow up, okay, to see how their AWS business progresses, okay, for this next few quarters. All right, so let's go to the summary now. All right, so the summary is very simple. Okay, Amazon is still continuing to focus on the customers. Okay, their revenue is growing steadily. I've already shown you the cash flow is tremendous. It's quite amazing. It's a very strong cash flow generating machine. The management are forward looking and always think long term. You can see that already because like if they are not forward looking, then that means they cannot anticipate what's the next in demand really, right? And they foresee generative AI, they foresee there will be more demand coming already for AWS. And because of this, okay, I need to make investments, right? Because they foresee already for the next few years, people will get more and more using the cloud data centers, right? And the cloud lah, yeah. So they still consistently reinvest into the business. And the things to take note right now for this quarter is AWS and the generative AI will be the next growth driver, okay, to help Amazon continue to grow. All right. So I hope this video, this short video, give you guys some ideas, okay, on how the performance of Amazon. So feel free to share, okay. What is your comment, all right, for Amazon's this quarter's performance, or if you have any questions to ask about their performance this quarter, feel free to drop a comment or ask the questions down below. All right. So see you in our next video. Thanks,